so that they can live better today and also live better tomorrow and through retirement. Endowus, very quickly, on the Endowus Live YouTube, you'll see a lot of content from different perspectives and also different better tomorrow and through retirement. Different people with different perspectives about personal finance. Some recent webinars include, one with the Woke Salaryman founder, Rayming, and a colleague of mine, Sheng-Shi. Another with Lou from the 1M65 CPF movement. We also host webinars ourselves about important things like how to invest your CPF well, how to invest well, and we also invite people from leading global asset managers such as PIMCO and Dimensional to speak about their investment philosophies. If you like our content, please subscribe with the red button below. I believe it is a red button. And other content you'll find there are webinars where we've hosted people like Dr. Wealth, people like Budget Babe, Dollars and Cents, and many more. So we hope this content is all helpful in your investment and personal finance journey. Really quickly on Endowus, we started the firm to help all of us, including ourselves, to invest better so that we can live easier today and live better tomorrow and through retirement. We've built technology to assist in this process with really three main goals: access to better products at a lower cost with aligned and suitable advice. What we've managed to achieve by doing so is now Endowus is the first and only digital advisor for CPF, SRS, and cash savings. Tonight, we're introducing a very exciting product, Cash Smart, which we will get into very soon. I just want to introduce my co-host, Sam. Sam is our chairman and chief investment officer. I'll let him say hi and introduce himself.
Hi, everybody. Welcome to Endowus Live. Thanks, Greg. And it's really exciting today. We have so much interesting and fun stuff to share with you guys, and really excited about the Cash Smart launch. So obviously, I am the Chief Investment Officer in Endowus, in charge of the investment office and all things related to investment, including the fund due diligence and stuff. So just wanted to say hi, and then I think we have more introductions later, Greg, right?
Yeah.
That was the plan.
Yeah. So Sam has 25 years of investment experience and was before Endowus. He was the CEO and chief investment officer of Morgan Stanley Investment Management in Asia. Myself, I started my career in investment banking at UBS, where I was helping private equity and venture capital firms around the region and around the world to fundraise and with their corporate strategy. Subsequently, I joined Grab, where I led their payment and technology partnerships and business development when, if you guys remember, Grab was Grab Taxi, so taxi only and cash only. It feels like a lifetime ago, but that was quite a journey. So tonight, today, Endowus.com is the first and only digital advisor for CPF, SRS, and cash. And we're very proud to do that. We are very excited to continue this journey, the investment journey, by introducing Cash Smart. So at Endowus, we're very focused on evidence-based investing and investing towards your goals. That means, being able to separate your money into buckets that are suitable for the reason why you need to use the money. In our line of work, we call it asset liability management. So you can think about it in its most sort of distilled form. You have different assets based on when those liabilities happen and what those liabilities look like. So that could be a lump sum or it could be a cash flow. An example of a future cash flow liability would be retirement. where you're not taking all your money out at once, but you're taking it out over a series of payments in a series of years. A lump sum, for example, could be a down payment. And depending on how far into the future that down payment is, you would then match your investment risk tolerance towards that goal. So today, we're talking specifically about Cash Smart, which is our cash management solution, which we like to think of as your rainy day fund and the cash flow that you need in the near future. Now, within Cash Smart, we have a couple options, which we will go into detail about, and the reason why we have these options. So there are two options with different target returns, and therefore different levels of volatility to expect. And therefore, you could be using both of them, or you can be using one of them based on the way you want to position your money. So hopefully, by the end of tonight's webinar, we will be able to explain, and you can confidently understand what is driving these Cash Smart portfolios, the risk behind them, the risk with them versus, for example, a bank deposit, and how you can get a higher return, a very efficient return, by using a solution like Cash Smart. So really excited to introduce Cash Smart. Headline figures: up to 2.2% projected yields, daily accrual of interest returns, which are then reinvested at the fund level and compounded towards your long-term returns. There are no lockups, unlimited transfers. Again, we have two options: Core, which has a projected return of 1.1 to 1.3%, and Enhanced, which has a projected return of 1.9 to 2.2%. And as the Endowus promise always goes, we lead the fight for fair fees. We are low cost. There are no sales fees, no transaction fees, and 100% trailer fee rebates. So we can only get paid by you, the client we serve. In the case of Endowus Cash Smart, that is 0.05% per year, or $5 on every $10,000 invested per year. When constructing solutions for our clients, something that is very, very, very important to us is security, security, security. And we are the first and only digital advisor, and we are licensed by MAS. And we are the first and only digital advisor for your CPF, SRS, and cash. And we do this by partnering with the existing framework, by partnering with the existing financial institutions who have been leading this industry and leading it in Singapore for a very long time. I think Cash Smart is no different, right? One thing that is very dear to us is that when clients create an Endowus account, we create a special purpose Endowus. For example, let's create an Endowus account for Sam. We create a Sam Endowus account at UOB Kay Hian in Sam's own legal name. When Sam sends money into his Cash Smart portfolio, he doesn't send it to Endowus. He sends it directly to UOB Kay Hian's trust account. And UOB Kay Hian is the largest broker in Singapore. They're publicly listed. They are owned significantly by UOB Group, and they're $1 billion market cap business, the biggest broker in Singapore. Similarly, with the people managing your money, we don't manage the money ourselves. We are a MAS licensed financial advisor, and we partner with the biggest money managers in Singapore. In the case of Cash Smart, we've partnered with UOB Asset Management, Fullerton Fund Management, which is a subsidiary of Temasek and partially owned by NTUC, and LionGlobal Investors, which is part of the OCBC group. So, one thing that was really important to us when creating this Cash Smart solution and listening to feedback from our clients is flexibility. So, there are a lot of solutions out there where there might be restrictions in terms of They might give a really high interest rate number, and then there'll be restrictions on how much can earn that interest or the things you have to do to earn that interest. With Cash Smart, we didn't want anything like that. We were focused on no lockups, no complicated tables, a very clear understanding of the interest you're earning, being able to earn that interest on a daily basis. And then beyond that, actually providing choices for your Cash Smart portfolios. And you can have one of them or you can have two of them. We think that they are there because people, first of all, have different tolerances for volatility, and secondly, people may have different goals for their various Cash Smart portfolios. And we'll explain how to choose between the two Cash Smart portfolios best for you. So what we end up with is what we call Cash Smart Core, Cash Smart Enhanced. They're both multi-manager portfolios of high quality institutional fixed deposits, money market instruments, and ultra short duration fixed income instruments to get you a safe and diversified and efficient return on your cash. So, these descriptions for core is unlikely to ever have a day of negative performance. For enhanced, there are periods of negative performance, though very rare. So for enhanced, we advise, for example, cash needs where maybe you are drawing down over time, but over a period of time, and also where you don't need to draw down the whole piece, the whole portfolio in one huge lump sum within maybe the next month or so. So if you understand the reasons why you have that money and why you want to use that money, you can then make an informed decision on which portfolio is more suitable for you. So I'm going to hand it over to Sam to talk a little bit about the world we live in today and the really low interest rates that we are currently experiencing. Sam, I'll let you take it from here.
Thanks, Greg. We already have a lot of questions and we will get to it. So please keep the questions coming. We may not be able to answer it all today, but we'll try to do the best we can. So we're going into the details and trying to answer some of the questions that you have already posed us. So first of all, as a backdrop, we have to understand the environment that we're in. I think it's very clear that with all the, the central bank monetary policy that has resulted in massive interest rate cuts and also large liquidity injections into markets and economies, that has resulted in all interest rates globally falling quite rapidly. And Singapore is no exception. Singapore used to have quite decent yield, above 2%, but this number has continued to drop, and we saw a sharp drop in March onwards. And we're now at almost historical lows for SIBOR, which is a benchmark that many people use for lending. This is the interbank rate. And also, if we look at the options for investing our money, the next page shows that one of the most popular ways to invest. Greg, next page is the Singapore savings bond returns, and this is the comparison between January and June. So the latest numbers for 1 year returns is fallen dramatically from 1.52% to just a puny 0.3%. And even if we extend out, normally if we extend duration and maturity out to a longer period, we do get higher interest rates, but it's not much better. And the 10-year returns have fallen below 1% for the first time, I believe, to 0.8%, which is extremely low. So it's causing a lot of trouble for people with liquidity, with their cash management, because we all have some cash lying around somewhere, and we're not able to get the yield that we are used to, whether it's from bank savings accounts or current accounts or fixed deposits or Singapore savings bonds as well. Next page. So what we've seen year to date is this massive surge in Singapore bank deposits. I mean, there's many reasons for this. One of it could be that, we were all stuck at home. We didn't spend our money. So household balance sheets have been restored. and our savings have gone up in bank deposits. For those that still have a job and still have an income, many people have suffered through this cycle, but I think overall it's resulted in rising deposits. It could also be because the Singapore government has been generous in, doling out cash to individuals and corporates, and that has flowed into the bank deposits as well. And so, for various reasons, deposits have gone up quite a lot, from 650 billion last year, a year ago, to above 700 billion. So it's a huge amount of money. It's a flight to quality as well, as they call it, because people are worried about volatility in markets, and some people have taken money out of financial markets and have put it into bank deposits and safer assets, and that's reasonable and understandable, and that has also increased overall deposit rates levels as well, I think. The next page. In the developed markets, a common place that people put money into is money market funds, and the reason is because bank deposits are really, really low in interest rates. So although money market funds are technically classified as investments, the underlying investments that are made through money market funds tend to be very, very high quality. First of all, it's government bills, really short-term bills, or treasury bills. Singapore also has treasury bills that they issue 3 months, 6 months, 12 months. And also it could be fixed deposits, institutional fixed deposits. So there are banks who lend to major institutional investors like Temasek, which manages our cash fund. And they only exclusively invest the cash that we give them into institutional fixed deposits. That's why they're called cash funds. So there are cash funds and then money market funds, and then there are also short duration fixed income funds, which are ultra short duration. And normally they will hold those fixed income with a very short maturity left. So there's no like fluctuation in prices, in any meaningful fluctuation in price, because it's very close to maturity. And so they buy it and hold on to the maturity, getting the coupon, the interest rate that they are likely to get with that purchase. So these are all relatively safe, and even the fixed income stuff is very high quality. Very large corporations, stat boards in Singapore, government owned entities, Temasek entities, and high quality corporate bonds as well. But more important than that is that we don't buy it for a year or 2 years or 3 years, where the price is very volatile and is affected by interest rates. It's actually long term, very short term ownership. So we have a very fixed view of what interest they're able to get. So in developed markets, this is a very developed area of investments. And it's a very natural area where liquidity flows into when people want short-term liquidity management, or people are worried about markets and risk, and therefore they allocate to money market funds in the short term. And so we've seen a similar trend this year in the US, where there's been massive flows into money market funds in the hundreds of billions because of the COVID crisis and the uncertainty that exists in markets. And so Singapore has seen these huge deposit flows, and US has also seen unprecedented flows. But unlike Singapore, they have flowed into money market funds, which tend to give you higher yield. So Endowus, next page, Greg, is been really focused on trying to develop a cash management solution for our clients. We did a survey with many of our clients and people that are interested. 85% of respondents told us they want higher yield cash management solutions. More than 60-70% told us the 3 most important things for them is: 1, higher yield, obviously, but secondly, they want liquidity. They don't want to be locked up. And the third thing is they want safety. So they don't want the risk of losing a meaningful amount of money. So what we did was come up with 2 wonderful products. The first is Core. If we look at the projected yield, it's something around 1% plus. And for the enhanced, it's 2% plus. This is what's right now, the projected yield. If you hold on to this for the next annualized kind of return, until all the underlying securities mature, this would be the actual realizable yield. This is the way that many people look at projected yield to maturity. Now, one thing that is very important to us is trying to meet the requirement of our customers in terms of safety. Greg talked about safety, 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 and we talk about safety at various levels. It's about how we manage the funds, how we create the accounts in our double ledger with UOB But at the investment level, safety is about what is the potential risk of losing money. Now, the core, we've looked at historical returns and is unlikely to really ever lose you money, even on a daily basis. And enhanced does have more fluctuation because we've used short duration. And we've looked at the cost structure of these funds. We've combined two funds. So as Greg highlighted, there's a multi-manager fund portfolio. And we've worked with the fund managers to get to the lowest cost achievable. I think there were some questions about whether this is the lowest cost and whether why we use retail funds as opposed to institutional funds. We try to use whatever fund or share class is the cheapest that we can get to with a client. Sometimes that is the use of an institutional share class, as in the case of the Fullerton fund. And sometimes it's using the retail fund and getting a huge trailer fee rebate. So that's what we did with enhanced and core. We actually got smaller rebates, but that's because we access institutional share classes for those funds. So you look at the total expense ratio, and I think some people only look at the actual annual management fee, but we've tried to estimate what is the most accurate total expense ratio, looking at the historical numbers, the current AUM, and the projected cost of the funds. We've added all additional administration costs on top of the fund level management fee, which comes to the total expense ratio. For the core product, from the gross yield to maturity, the projected yield, 1.52%, we therefore take out the total expense ratio of 27 basis points, 0.27%. From those funds, we were able to receive a trailer fee rebate. We've negotiated a 9 basis points rebate from the fund managers, which gets us to a net fund level TER of below 20 basis points. We've added back Endowus access fees, and we wanted to make this absolutely transparent. So we separate the trailer fees, which we give back to you, and we've added an Endowus access fee, which is transparently paid to us. So we put in our insights article, but if you invest 10,000 with us, that's $5. So it's the price of a cappuccino, a fancy, cafe cappuccino, obviously. But it's not much. It's all we need to keep the lights on. And it's, covering our cost as well to try to improve our platform. But it's the lowest level that we can achieve. And it's something that is much lower than anything you can achieve if you do so DIY. So the total cost net to you, the investor, is the TER minus the Endowus access fee, and then you add back the trailer fee rebate, and you get to a 23 basis points cost for core and a 35 basis points cost for enhanced. So the projected net yield is 1.29%. From there, we project a net range. The reason we decided to go with a range instead of a flat number is because to give you the fact to help our investors understand that this is not a fixed guaranteed return, that there is volatility, there is a chance that interest rates continue to fall, and the yields could end up being slightly lower than what was projected. So in order for the investors to, from our side, to be fully transparent and have high level of integrity, we wanted the clients to really understand what these projected net yields are and why we went with the net range. The range is something at this point, we're using the current projected net yield as the high end of the range, because currently interest rates are still creeping down slightly. We've seen the bulk of the fall, but we still have a little bit, maybe a continuous fall that is expected. So basically we've put the current yield as the high end of the range. And then we've put in a buffer. We've done a sensitivity analysis of if the underlying funds and the projected yields continue to fall, what is the level at which that could stabilize? So we projected this net range of about 1.1 to 1.3% for core. Currently it's closer to 1.3. There is a possibility it could fall, but we expect this range to hold and your 12 months return to be somewhere in this range. For the enhanced, that number is 2.2% currently, but we've given a bigger buffer because of the potential higher volatility of 30 basis points, so 1.9 to 2.2%. That is the range and the most likely range within which your interest returns will be for the enhanced portfolio. So for the next slide. So how does Cash Smart get higher returns than bank deposits?
So Sam, I just want to, I'll take a first stab at this. Adding on to what Sam was saying on this slide here, explaining Cash Smart Core and Cash Smart Enhanced. Think about what a bank deposit is. You give money to a bank, and that bank will likely lend it out and then pay you an interest. In the case of currently from the big banks in Singapore, the current and savings account interest on your bank deposit is 0.05%. Now they lend that money out, and it may be unsecured lending. And if let's talk about really quickly the tail risk. So that is, if something really, really bad were to happen, your bank deposit is insured up to $75,000 by the SDIC. So that's what a bank deposit is. You give money to the bank lends it out, it pays you an interest for giving them money so that they can lend it out and earn the interest, and this cycle continues and continues. Now, what is Endowus Cash Smart? Endowus Cash Smart is a portfolio of bank deposits, institutional fixed deposits, government bonds, short duration and high quality, and then corporate debt, short duration and high quality. So what you end up with is a portfolio of short duration, high quality risk that is spread out across many counterparties. And as a result of this dilemma, the bank has to pay an interest that they can afford to pay based on the return on their lending activities, mainly. For Endowus Cash Smart, we pass the money on to, in our case, Fullerton, UOB Asset Management, and LionGlobal, and then they decide, based on the parameters of the investment fund, they can place that money at many banks with many counterparties, with many high quality corporates and governments, and get a higher yield on your return. So, the way we like to think about it is a much more efficient way to park your cash, and in some ways, actually a different type of risk, because rather than having one counterparty, you are actually spreading your counterparty risk very, very wide. So the SDIC has never been activated, but in the case of the global financial crisis, for example, banks did go bankrupt, and people did lose their deposits. We think way back to times like the Great Depression, and we hear about this concept of run on the bank, and that's everyone running down to the bank physically to pull out their money. Now, banks lend out more than they have in deposits because that is their business, and it is their business to manage risk. So you can think about it as extra layers of diversification in the Endowus Cash Smart portfolio, more flexibility in the Endowus Cash Smart portfolios, which gives you a higher projected return than a bank deposit, for example. And just adding on to what Sam said in the previous slide, we give a range because the rate can change, but it's exactly the same as the rate at your bank deposit can also change. So, the way I like to think about it is, I think that it will be more like a spread. Endowus Cash Smart, given the flexibility and the ability to diversify, and that the fund managers manage billions of dollars and they can access more cash-like securities with their investments, and therefore with your money, which you put into Cash Smart, it will get a higher return than the bank. And if the bank deposits increase their rate, then Cash Smart will have a spread on what you would get at the bank deposit. And that will continue, that relationship will continue. And it's the the Cash Smart fund manager's job to ensure that they are efficiently deploying capital and managing their risk in order to get this higher return. Yeah.
Okay.
Sam, I'll pass it back to you.
Sounds good. So the next page shows us the underlying funds. We showed you at the portfolio level what is the yield to maturity, the fees that we charge, and the fund level fees, and then the net projected yields. So this is just a breakdown at the individual fund level, what that number is. As you can see, Fullerton SGD Cash Fund only invests in institutional fixed deposits, so it is the safest fund. And we chose it precisely because of this characteristic. However, you can clearly see what the impact of yields is if we net out the fund level fee. And the number is updated as of last week. We just got an updated number, and we have an agreement with the fund managers to update these rates on a weekly basis. And Endowus, in full transparency, which is what we believe in, transparency and integrity, we will update these yields just like a bank publishes their interest rates for their deposits on our landing page website, so that our clients and new customers will be able to transparently see exactly the updated yield to maturity as they change. So the projected yield net of all fees, and this is the same for everybody because Endowus is always the cheapest way to access funds in Singapore. The Fullerton SGD Cash Fund, if we net out all the fees of 15 basis points, the net yield is 0.58%. So it is just like the bank deposit rates, but it's an institutional rate. It's picked up a little bit, so the net yield is back up to 0.6, which is quite decent, considering that it's risk-free relatively, just like a bank deposit. Of course, accepting Greg's comments about the insurance and potential risk of banks going bankrupt. LionGlobal Enhanced Liquidity Fund is a much more diversified, enhanced product which invests in some fixed deposits, but a lot of it in money market instruments and also very short duration fixed income products. Average credit quality of A or above, and total fees are slightly higher. But these are also institutional level funds, and we get access at a lower cost. So the rebate may look small, but I'll explain later how that compares to DIY platforms and banks. Somebody reached out to me about DBS Bank platform and what their fees are. And I'm always shocked when I look at the retail fund level fees because they're so high. I'll go into that in more detail, but the net yield for LionGlobal Enhanced Liquidity is 2%. And the UOB SGD fund, which is a short duration fund, same numbers will get us to a 2.4%, a slight boost in the yield. And this is exactly how we should see it, because risk and returns, we always say, are highly correlated. There's no free lunch other than diversification, because if you have higher risk, you get a higher yield or returns. If you take lower risk, then you get lower returns. And right now, if you go to banks because you feel it's safer and put it into bank deposits, you will get really low yields. There's a reason why people talk about how cash is trash, because right now it's so low yielding that it's not going to really improve the livelihood of people by keeping it in bank deposits. So we've come up with solutions which are an improvement. So we're fully transparent in saying that this is not risk-free. This is not the same as a bank deposit. We are targeting a yield or a return that is 1% for the safe product and 2% for the slightly riskier product. We'll show you why it's not as risky as people think. But this is the yield and returns that you are likely to get is commensurate with the reality of the underlying holdings and the risk that you have. We have combined two funds for a reason. If you go with a single fund, the volatility is higher. But if you go with two funds, the volatility does reduce, as we will show in the next few slides. Next page, right? So these are we wanted to also show you the actual historical returns. This is what the underlying funds did over a 1, 3, 6 months and 1 year period at the bottom. And then if you combine it, this is what the Endowus Core or Enhanced would have done if we had launched it 1 month ago. If you had launched it 1 year ago, this is the actual realized yield that you would have gotten. Now, if you look at the core and the enhanced 1 year number, right now we are projecting 1.29% net projected yield. The past 1 year, it was 1.65. For the enhanced, interestingly enough, the 1 year return is 2.19 and the projected yield is still 2.2%. So slightly less than the 2 year annualized number, but almost similar as the 1 year number. And we can explain why later. But it's really stark that the core, which is the shorter, safer, lower risk-free rates, and that's exactly in line with what has happened to treasury rates and interest rates globally, central bank rates, and the shorter end of the yield curve that has come off very sharply. And so the safer asset classes are going to be lower interest yielding. That's just a fact. There's no getting away from that. You can look anywhere around the world and you will never be able to find anything that is better because interest rates have fallen. But in the longer duration, slightly longer duration, and if you push out the risk a little bit, actually the yields are not that bad and it hasn't changed meaningfully from the year before. So I think it's important to understand the different levers of why these yields move and how we want to really focus on the projected yield rather than the historical returns. So a lot of advisors and other guys look at the historical returns and say, this is what is likely to happen. But we know that the world has changed. We know that interest rates are lower. And so we would like to really highlight to our clients that focus on the projected yield number. We will try to be as transparent and as, with a high level of integrity. We will work with the fund managers to get the best data so that we can give you the best idea of what the yield will be over the next 6 to 12 months. Next page, Greg. So with that, I wanted to show you the actual projected, how the actual projected yield would have moved for these different funds and the Endowus Cash Smart portfolios. This is a data that is not publicly available. We've worked with the fund managers to get this data so that we can accurately reflect, what would happen through an extended period of 6 months this year during a period of high volatility. And we wanted to give you exactly what would have happened in the projected yield numbers for the Fullerton Cash, the Enhanced Liquidity, and the United SGD Fund. And as a result, if you combine them, we get the core and the enhanced yield in Enhanced Cash Smart products. And this is really interesting because you can see that the Fullerton Cash, which is an institutional deposit-oriented investment and safer, just followed the interest rate movement, just all the way down from mid 1%, low 1%, all the way down to high single digit, below 1%, 0.7% level. And so that's what happened to Fullerton Cash. Enhanced Liquidity actually dipped with the interest rate fall, but managed to come back somewhat, but remained largely very stable as the middle layer of the fund. But United SGD, being the flexible one, being the one that can adjust risk a little bit here and there, saw some opportunities when there was massive dislocations in the markets to readjust its portfolio and actually acquire bond funds which had collapsed in price temporarily, and took advantage of that by acquiring short dated, short duration, short maturity fixed income products that suddenly saw prices move very sharply lower because of the dislocations in the market, and took advantage of that and took on some more bonds at higher yield. And that's why, despite it being a fixed income short duration fund, it actually increased the projected yield number by a meaningful amount initially. And obviously, as interest rates continue to come down, that has tracked the interest rates down. And as a result, you can see that over the past 6 months, the projected yields would have moved. And that's why we've given you a range rather than a fixed number, because it's within that range. But it's also showing you that there is some volatility. But we want to highlight that these projected yields would be transparently displayed to the clients at every level and at any point in time where there's a major change.
Sam, really quickly, I
Yeah,
think
sure.
it would benefit people for you to explain how, philosophically these projected yields are calculated. Like, what do they actually mean?
Yeah. So basically, for Fullerton Cash, it's really easy because they have an exact interest rate and their return is guaranteed. Just like a deposit, the interest is guaranteed. The only thing that changes is how long that deposit is for. So sometimes I have some deposits, institutional deposits that are 2 weeks or a month or 3 months or 6 months or 12 months. So they cannot hold any institutional deposit beyond 12 months. But they can take advantage of good rates at different banks and take advantage of that. So that's a fixed return, and the yield that their current deposits hold, and then we annualize that return, gives us an indication of what that gross yield would be. For Enhanced Liquidity and United SGD, they're similar, but the only difference between the two is that Lion Enhanced Liquidity, because they are shorter, there's a shorter time left in their underlying security holdings, they're able to just say that we're going to ignore price movements and we'll just amortize from the day we buy to the day it matures. We just average what the total interest rate is and average it by the days. And then we'll just adjust the value of that fund and give you the interest on a daily basis and amortized over that period. So that's a simple way to say that enhanced liquidity prices do not fluctuate. So it's a very safe, stable, yielding return. They would never trade securities. So even if the price moves intraday, it doesn't matter for them because they will just hold it to maturity and they'll be able to realize that yield return. For United SGD, slightly different. Because they have a slightly longer duration, they are affected by price movements. But once again, the legal term is a marked to market price. So when prices move, then they have to reflect that in the NAV of the underlying fund at the security level. But these guys don't necessarily have to realize that price. If prices fall, they don't have to sell it at that price. They actually hold on to it until maturity and realize the interest, just like the LionGlobal Enhanced Liquidity Fund. But the only problem is the price is adjusted and there's volatility in that price adjustment. Sometimes prices can go up and maybe they can take advantage of that. But in most cases, almost always, the United SGD fund will hold all of their holdings to maturity so that they can realize the yield to maturity that they have. So those are the three different components. When we combine it together, our Cash Smart core product is a very stable, there's no changes in, and maybe we can move to the next chart, Greg, which shows you this price movement. So the light blue line is the Cash Smart core price since the LionGlobal Enhanced Liquidity Fund was launched in 2018. We've shown you the daily price movements, and that 0.047% fall in the price was temporary, and it was resulting from lack of liquidity back then because the fund had only launched and the fund size was very small. If you look at what happened in March of 2020, the core portfolio would have fallen a 0.02%. So, I mean, the change in the price is virtually none. That it's only had like 1 or 2 days of negative movement, and that was a 0.01 to 0.02% movement, and it was made up within a day or two. So the core product is a very stable NAV-based amortized yield with very little fluctuation, no volatility, and you're able to harvest the returns on a daily accrual basis at the NAV. So the core product is like a bank deposit. It's much more like a bank deposit because it's very stable and interest accrues every day. And there's very rare, if ever, a day when the NAV will fall. Now, the enhanced product is different. As I mentioned, the UOB SGD fund is not amortized. It's based on prices. So mark-to-market prices can fluctuate. And if you look at what happened in March of this year, there was a period where the market fell and bond prices saw massive dislocations. And even, US Treasury bills and Singapore government bills, priced out and yields rose even though they were cutting interest rates because of a lack of liquidity in the system. And so that was a once in a decade crisis that we experienced. And during that period, our Cash Smart enhanced portfolio would have fallen less than 1% over a couple of weeks. Of course, it took a little bit of time to fully recover, but this is how we take a little bit more risk and get the 2% plus yield. And that's exactly why we're asking clients to really consider the risk, that appetite that they have for this cash, and really consider what is the preferred yield, but also what is the preferred risk. We would advise that this once in a decade event doesn't happen very often. And maybe at this point, we can move to the next slide, Greg, which shows us the long-term United SGD fund performance. This fund has been around since 1998. So it's been around for 22 years. In the first 10 years, it only invested in Singapore dollar instruments, and it realized a lower yield of 2.29%. So it was very stable. And yes, obviously there was volatility in 2008, 2011 when the euro crisis occurred, before the ECB stepped in, and then again recently in the March COVID crisis. But the SGD fund in 2008, post the financial crisis, they changed the fund manager, and Joyce Tan, the celebrated manager of the United SGD fund, which is a multi-award winning fund and one of the best short duration funds around with the longest track record, changed tact and started investing in US dollar liquidity and US dollar short duration products. These are all hedged back to Sing dollars so that we have a fixed return in Sing dollars. And since then, the fund has been able to achieve a slightly better annualized yield of about 3.77%. Obviously, this is not something that is sustainable, and it's from a low base. And so we think that with the management quality, the long track record, and the stable NAV growth, we will be able to realize the 2.4% or 2.2% yield that SGD fund is able to forecast with the current holdings. And again, once again, we dilute that by putting in only 50% of this. So 50% is the LionGlobal Enhanced Liquidity Fund, and the remaining 50% is the United SGD Fund. So it dilutes some of this volatility with the NAV-based amortized returns of enhanced liquidity. And that's the beauty of diversifying and using a multi-manager approach to even your cash management solution. If we move to the next page,
I think it's just key to highlight, it's multi-manager, multi-strategy, and then also highly diversified at the underlying holding level. So what you end up with is spreading your counterparty risk very wide. And I mean, I think going back to this slide really quickly, and when we started the presentation, we talked about having different buckets of cash that are most appropriate and matching a portfolio that is most appropriate with them, and also your own behavior. I mean, I would like to highlight that the COVID-induced volatility in the bond markets is something many lifetime bond managers said they had never seen before. And Sam, maybe you can talk about GFC really quickly and what happened then, but the global financial crisis. But having the enhanced portfolio go down by 1% very transparently is something that we really want to highlight to people, that these types of things are they are moving as a portfolio, and you need to respect what is in the underlying holdings. You need to respect markets. Yeah.
Yep, sounds good. I think there was some questions about the quality, and both the enhanced liquidity and the United SGD fund are average hold and credit rating of A, and they have short duration. So the risk of that credit rating, and they have higher quality and maybe slightly lower quality holdings, but they've shown tremendous track record in managing that risk really well. And so they do manage, and they don't trade the fixed income. That's really important. Many of these fixed income funds actually trade and also have high volatility in pricing. But the short duration ones, they hold to maturity. So it doesn't matter what happens, as long as the underlying security does not go bankrupt, there is no risk of ever not receiving your principal and the interest that you're owed at the time that you buy the underlying security. So that's really important to understand. And so we move on to this page, which is, some people have asked us, what would it cost for us to replicate the portfolio if we did it ourselves on a DIY platform? So first thing is that the fund level fees could be different. It could be the same, but it could be different. So for the Fullerton SGD fund, it's largely the same, so 15 basis points. And the trailer fee rebate minus the Endowus access fee nets out in this case. So the total cost to our portfolio is 0.15%. But you look at the LionGlobal Enhanced Liquidity Fund, and you'll notice straight away that the fund level fee is different. And the reason is because our fund level fee is the institutional share class for the LionGlobal Enhanced Liquidity Fund, because we were able to access that. And still off of that institutional fund, we were able to take a trailer fee rebate as well on top. So we get to a much lower net fee. As opposed to a DIY platform, which will only give you access to the retail share class of 0.74%. So meaningfully higher, almost double the fees. And the other thing that I want to highlight is some of these platforms actually charge you an additional platform fee. So the common platform that we all know starts with F or an I, F. But that one, they charge 5 basis points a quarter, which adds up to 0.2% annually. And so those are additional platform fees that are charged on the funds. And that adds up to a much more meaningful number. And the third one, UOB Asset Management, is an interesting one because we tried to look at the institutional share class because they had an institutional share class. But what we realized is that one, the institutional share class and the trailer fee rebate that we tried to get for it couldn't achieve the full trailer fee rebate of 33 basis points that we could achieve with the retail share class. So we chose to go with the retail share class. And also the other reason is we actually wanted to get the fee negotiated to this level for not only our cash investors, but also SRS. So SRS, Supplementary Retirement Scheme savings. If you do not invest that money on your DBS, OCBC, or UOB bank platforms, the SRS accounts only give you a 0.05% interest rate, which is ridiculous. And so we want you to use these Cash Smart products for your SRS. And the UOB Asset Management United SGD retail share class is available for SRS. All of our underlying funds are. And as a result, Cash Smart Core and Enhanced are both available for SRS. And therefore, we were able to negotiate a higher trailer fee rebate from the UOB asset management team for the United SGD fund. So if you look at the bottom cost ratio, you can see that Endowus versus using a DIY platform. And you can even remove the platform fee and you'll realize that will still be much cheaper than a DIY solution. So especially if you build 2 funds into a core or 2 funds into an enhanced, you get almost 60% plus savings versus using a DIY platform. Next page. And this is just a graphic to show you what that difference is. Both the fund level fee and the access fee on the platforms, there's a meaningful savings. And we've shown you through multiple webinars that these returns compound over time. This is a major difference that will make a meaningful difference for your cash. Next page. So that we've received a lot of questions on our competition. We've highlighted in our video. If you haven't seen it, please check out our Endowus Cash Smart video, which is a wonderful video our marketing team has put together. Shout out to Jason Huan, our Chief Marketing Officer, and his team who's done a fantastic job. And Greg alluded to it and showed you a picture of that. And really, we have made Cash Smart like as simple as possible. we didn't want to put all these like limitations and barriers and hoops and hurdles that you have to go through in order to achieve these yields. So the first thing that I would like to say is that unlike the savings accounts and other fixed deposits, no lockup, no trailer fees, 100% rebate of them, no transfer fees, unlimited transfers. There's no sales charges as well. And so we tried to make it as simple as possible. You don't have to put in your salary. You don't have to use credit cards to achieve these yields. So against the banks, we showed you what how that compares earlier on in the webinar. Now we wanted to compare to some of the competitors, Stashaway Simple and Money Owl YSaver, who have launched similar products using similar underlying funds, but different products. So Money Owl YSaver uses a Fullerton fund, which, as we said, is the safest fund. But as a result, because of that, you achieve a lower yield. Stashaway Simple uses one of our funds, which is the LionGlobal Enhanced Liquidity Fund, and they chose to put it together with another LionGlobal fund, which is the Money Market Fund. And the Money Market Fund is effectively something that is between the cash fund, Fullerton Cash Fund, and the LionGlobal Enhanced Liquidity Fund in terms of its underlying securities, duration, and weighted average maturity, and the yield as well. So it's very commensurate to that. And so our core effectively is the money market fund for LionGlobal, and it's something that we feel is much more stable. It gives you a little bit of a boost in terms of yield. But Stashaway Simple has topped it with the enhanced liquidity, which is too similar for us in our view. So we have tied up our enhanced liquidity with the UOB Singapore Dollar Fund in order for us to achieve that 2% plus yield. And Stashaway Simple and YSaver, if we look at the underlying funds and combine the performance, the historical performance is right there. So you can see clearly that the Endowus Cash Smart core is quite comparable to the Stashaway Simple, but are enhanced at a safer product at that. Whereas our enhanced product is actually giving you much better returns. And this is historical once again, which we don't want to dwell on too much because this is behind us. And we always say past performance is not an indicator of future performance. So we've worked out the projected yields. So the next page shows us the projected yields at the Endowus core and the underlying fund level for the gross projected yield and the net projected yields. For Money Owl YSaver is simple because it's exactly the same as the Fullerton SGD cash. It's exactly the same cost as us at 0.15%. So that's a very simple comparison. It's what it is. It's the Fullerton SGD cash, a safe institutional deposit product, giving you slightly lower yield because of its safety. Stashaway Simple is slightly different because they don't publish the yields anymore. So it was difficult for us to actually calculate the numbers. We had to use the numbers that the fund managers gave to us. So this is using the underlying LionGlobal Enhanced Liquidity Fund, and then the money market fund numbers that we receive from LionGlobal, an updated number with an updated total expense ratio as well, because they did a special analysis for us and shared with us the cost analysis. So this is the latest numbers as of last week for the LionGlobal Enhanced Liquidity and the money market fund. And Stashaway is simple. If you combine it, the gross projected yield is 1.9%. And the net projected yield is 1.67%, so below 1.7. And that's how that compares with our core and our enhanced projected yield numbers. So this is so that people who have questions about how we are positioned versus our competitors, we do not have a limit like Singlife, the 10,000 limit that they have for the higher interest. There's no limit on the upside. You can put in as much money as you want, even in the millions if you wish so. But if you have smaller amounts, you can put that in here as well. For existing customers, there are no limits, and you can invest as small as $100. For new customers, we still have the $10,000 minimum, but obviously it is across all of our products. So Cash Smart, but also our investment products, and we have a wonderful globally diversified low-cost investment offering, core portfolios for equities and bonds. Across all sources of funds, your CPF and your cash savings and your SRS. So $10,000 across all of those different offerings or seamlessly invested on the Endowus digital platform. That's what we offer. Next page.
Yeah, so really quickly, just wanted to, we're getting to the end of our presentation, but just wanted to explain what would happen if you were to invest $50,000 and to get these projected yield numbers. So the left one, 0.16, is the current MAS guidance on the bank's saving deposits rate. So $50,000 after 1 year would pay $80 of interest. The core portfolio, if you receive a 1.2% return, would be $600, and then the enhanced portfolio would be $1,000 at a 2% interest. Now, if you quickly look up, any bank, your current bank, and try and look up their current account or savings account rate, you will see that the rate is probably 0.05%. So that means $50,000 would yield $25 a year, given the current rate that the banks are providing. So we just wanted to highlight that, this is how this can make a meaningful impact on your savings and what they are doing. It can be the salary you deposit. It can be, the money that you might need in the next 6 months, the money that you need in the next few months even, or the money that you just want to keep very close to you with very low volatility for any emergencies that come up. And we've actually been running our Cash Smart portfolios internally and for our institutional clients for some time now. And we've worked hard to bring it and make it available to everybody. I think really quickly as well, Sam made some comments about our competitors. I mean, we view them positively. I think we're all helping each other to produce better solutions for our clients. I think that Cash Smart, Core, and Enhanced really serve their purposes for most cash needs of 99.9% of people. And by cash needs, I really mean, shorter term cash needs, a substitute to your current account, your savings account, and your fixed deposits. And that's where we really think, Cash Smart can help you to live better. This is a repeat of the previous slide. Now that we've gone through all of the context, it may make more sense and help in deciding between which portfolio makes sense for you and your cash and money, core or enhanced. In the description of the presentation, we actually have a link to the Cash Smart landing page, a link to create an account, and a link to, I believe, our Insights article, which goes into more detail around the Cash Smart solutions. Really quickly, I wanted to provide a demo on how one would create a Cash Smart portfolio. So this is our landing page. Please ignore my face on the right there. But this is our landing page. So you can go to endowus.com/cash-smart. There's a link again in the description to the YouTube video. Really quickly scroll through a lot of the content we talked about today, a lot of information, valuable FAQs, which go into more detail. I think I saw some questions around SDIC and more on that. So if you click on, for example, this FAQ, if you go to the link, it will talk in detail, and you can click further into our FAQ on SDIC, the risks there versus the risk of Endowus Cash Smart. So simply, I say get Cash Smart. I'm asked to create an account, so I will create a demo. My computer is thinking very hard for some reason. I'm then presented to onboard with my info, which is faster for Singapore citizens and Singapore PRs. We can also even pull your CPF information and help you with your CPF investing, or complete the form manually. As I already have an account, I need to complete the form manually. Our lovely Chief Investment Officer, Sam, will appear to greet you. And simply, you can select Cash Smart for your first investment goal. And you can subsequently add other investment goals for your CPF, SRS, and cash investing in our globally diversified portfolio of institutional quality funds at a risk level suitable for your goals. So I'll select Cash Smart here. And I can say I want to invest my cash savings. So I just continue. You can do this on your phone as well, or on your computer. And for the purposes of this demonstration, my initial investment is 100,000. And I can simply select core or enhanced for my investment. So for the purpose of the demo, I'll select core. The inputs I had, what my projected yield is. If you want to schedule a call with us, you can simply click here and you will be pushed to a calendar where you can schedule a call. The fees we mentioned, very, very transparently laid out. So we saw the 0.23%. This is the total cost per year of the Cash Smart portfolio and the underlying holdings in the Cash Smart portfolio. And we go even further to explain, what is actually in the portfolio. So here we can see the top 10 holdings. And these are from the Fullerton fund. This is where they have Singapore dollar deposits across banks across Singapore, and where they're managing that fixed deposit counterparty risk. And then you can see the top 10 holdings of the portfolio, of the combined portfolio of the Fullerton SDIC Cash Fund and the LionGlobal SDIC Enhanced Liquidity Fund, from high quality, short duration fixed income. You can see when its maturity is, which is very, very soon, to MAS bills, Republic of Singapore, so on and so forth. High quality names. You can see the country exposure, and then even the sector allocation between corporate bonds, government agencies, government treasuries. Once you're okay with this, you simply press continue with onboarding. And you would then fill in all of your information, as we are an MAS licensed financial advisor. Like I mentioned earlier in the presentation, when you create an Endowus account, we create an account in your own name at UOB Kay Hian, which is where you will send the money. We do not touch the money. And when you redeem, it will pass back through that UOB Kay Hian account and back into your bank account. As a result of this security, I think certain processes are slower than perhaps on other platforms where they will take the money themselves and distribute the money. But we felt as though it was a worthwhile trade-off for our clients as well as ourselves, in that you have a UOB Kay Hian account in your own name. So when you onboard, you will notice that Endowus will approve your account as an MAS licensed financial advisor, and subsequently we will wait for UOB Kay Hian to approve your account, where they will issue a broker number specific to you in your name, and that is the number which you will send your money to and receive your money from. We do this as well, and so that we are the first and only digital advisor across all sources of money, CPF, SRS, and cash. So really quickly, once I've finished my onboarding and I'm done with all that, I'm going to log into my colleague's account, Sinting, where she has a couple Cash Smart goals and a couple other goals as well. So really quickly going to her dashboard. These are her returns. This is her daily NAV of her portfolio. And then when you see these bubbles, that is when an event happened, an investment or redemption. And you can quickly see, what exactly happened on a particular bubble. You can also change this view to different types, different durations, and even a custom duration if you like. Sinting happens to have many goals. For example, her general wealth accumulation goal, which is invested in an 80-20 portfolio, so that's 80% stocks, 20% bonds, has SRS, CPF, and cash all working towards this common goal. And these are the recent transactions towards that goal. Going back to our dashboard, Sinting is someone who's had Cash Smart Core for a few days now, or maybe a few weeks. And sorry, and you can see that she is working towards that goal. She's also recently created a Cash Smart enhanced portfolio. On the Endowus platform, you can invest and redeem from these goals very easily. You simply click Invest Redeem. You select the goal with which you want to invest into, the account type, and continue from there. To redeem, I come here and I'll make a dummy redemption. So her general wealth accumulation account, I'll make a redemption of $100.
Do you think you can redeem that money into my account? Can you explain? Sinting's money into my account.
Sending money into your account. Unfortunately, Sam, that would not be allowed. So no, we cannot. But what I want to show people is when I'm making a redemption, I can redeem the money back into my UOB Kay Hian trust account, where it will earn interest at UOB Kay Hian until I want to redeploy it into another Endowus portfolio, or maybe back into an Endowus portfolio. I can also redeem the money back to in Sinting's case, a linked UOB bank account ending 5035, and continue from there, in which case the money we will then issue the sell order to redeem your funds. And once that money has settled back into your account, so let's just continue here for, and once that money has settled back into your account.
Yeah, Greg, can I just say,
yeah, go ahead.
On the previous page, the reason I asked whether we can send the money to us is there's a lot of questions about this, but there's only two options here. One, and we get a lot of questions, can we move money from Cash Smart into the investment portfolios, or we sell from investment portfolios and put it in the Cash Smart portfolios? And you can clearly see that the first choice is a cash balance, right? So we can keep it in the account, in Endowus account. Yeah. But the second part is the safety part, that we have always a linked bank account in your own name that is connected. So Sinting can only send to a bank account in her own name, and that's connected with Endowus. Similarly with me as well, we cannot send it to anybody else. So it's a measure of safety that we cannot actually transact in any other way.
Yeah, and I would say that it's not only something that Endowus checks, but actually UOB Kay Hian has that account linked to Sinting as well. And both institutions, both licensed by MAS, are also responsible for ensuring that that money goes into your own name account.
Yeah. Greg, at this point, there's a question that maybe we can answer on this, because when you're transferring money from the investment account to Cash Smart, or if you want to move your Cash Smart into investment account, you use this method of cash balance and creating a goal for your investment account, let's say. So there's a lot of questions about, the notice period or the liquidity. If I sell on Monday, when will I be getting the money and stuff like that? Maybe we can address that, the time period between 2 and 5 days, or, what is the actual, maybe you can explain a little bit about and address that question here.
Sure, Sam. So let's say we're investing cash. Endowus has a cutoff time of noon every day on a business day. So what would happen is if we receive your redemption anytime before then, or investment for that matter, we can send it off and it will be executed on the same day. So mutual funds or unit trusts trade 1 time per day at NAV. NAV being the net asset value of the underlying holdings of the unit trust. So that price is issued, and we will execute your trade on the same day. Now, in the case of redemptions, we need to wait for your money. So even though it's now out of the market, we need to wait for it to come back into your UOB Kay Hian trust account in your own name. So if, for example, I wanted to redeem $100 and then reinvest this into another portfolio, I would simply make a redemption, go to my cash balance, which is held in the UOB Kay Hian trust account in my own name, continue. And then I would make an investment of $100. And what would happen, quickly go to activity and balances. What would happen is that when that cash returns into my Endowus account, it will show up here in my cash balance. Sinting only has $11 of cash balance with us right now. And then when the program sees that, okay, you have a pending $100 investment, and that now you have $100 to fund that investment will then fire off. So that whole process, I mean, the settlement can take around 2 to 3 days. When the money settles, we can immediately send it off for investment. So you can imagine a moving money from your Cash Smart goal into a investment goal may take around, you may be out of the market for maybe around 3 to 4 days total. Similarly, if I was making a redemption and then a withdrawal, I would make the redemption. It might take, again, 2 to 3 days to settle. When the money settles back into your UOB Kay Hian account, we will provide UOB Kay Hian the instructions to send that money back to your bank account. So we like to say it's a 4 to 5 day process currently. And that is all, we understand that it is not the fastest thing in the world. We really don't think we're optimized to be a trading platform, but really a financial wealth platform. So something to just consider when you think about, how much money you want to put in Cash Smart, how much money you want to leave maybe in your cash balance so that it's easier to deploy into the market or to withdraw back to your bank account when you need it.
Sounds good. Do you want to continue or?
No. I think, really quickly, I can just say, I just want to highlight that, we're very transparent and you can go to your specific goals. This is the performance page, and you can toggle for example, how that goal has done. So this is the Cash Smart core goal. And you can see details on, your starting balance, all time, the investment amount, your redemption amount, how much is due to market changes, so on and so forth. And you can toggle this for any goal type, and for any amount of time, and also within the goal a particular account. So we wanted to provide full transparency around your platform. We also provide returns in 4 different calculations because after customer feedback, we realized that customers had different ways of sort of calculating returns on their own. So these are the 4 institutionally accepted ways of showing returns. And if you want more details on them, we explain how these returns are derived and when they should be used. So hopefully, people can also learn about how to transparently look at their investments by using the Endowus platform. Yeah, Sam, go ahead.
There's a lot of questions asking when the mobile app is coming.
So the Endowus web is a fully responsive web app using the latest technologies available. You can try us on your web browser, Chrome and Safari or anything else. And it works just like a mobile app, really slick, even with onboarding, even with viewing your account. But we are working on a native app to make that process even easier for our clients. So please bear with us. We'll have news on that coming soon.
Also, Greg, there's some questions about SRS and whether it's the same experience, whether the money can be transferred. So maybe we can touch upon that and how the money has to go back to SRS, I believe.
Yeah. So with SRS, it's a bit trickier because when you make a redemption with your SRS, that money has to go back to your agent bank, which would be DBS,
Can I
UOB.
clarify? Is it initially it's easier because we can pull the money, but when it's a redemption, it's the other way around. Is that how we should think about it?
Yeah, that's fair. So when you make an investment, so for example, let's make an SRS investment with Sinting.
Cash not, of course.
A Cash Smart SRS investment. Okay, so Sinting wants to create a new Cash Smart goal. So she presses add goal. For everyone who missed that, it's right here. Add goal. She selects Cash Smart, continue, and she can select to invest with her SRS. She can then select to invest any amount, and she can decide if she wants to be in core or enhanced. She can say Cash Smart SRS for my, well, it's not a great, well, she can say this is her Cash Smart SRS goal. Continue. She can see this information on her Cash Smart account, the fees again, the underlying funds, the underlying holdings. She would then say confirm by SMS. Sinting would get an SMS. We don't want to do that to her right now because I don't want to be in control of her platform. And what would then happen is we would get that order and we would send it off to UOB Kay Hian. The cutoff time for SRS and CPF trades is 8 a.m. We would then take, for example, tomorrow to check UOB Kay Hian and Endowus will check with your agent bank where you hold the SRS to see if you actually have $10,000 to invest. Assuming you do, the following day, we will make the investment. So in the case of SRS, you don't have to send us the money or anything like that. We are hooked up directly with your agent bank. So this is the case of SRS and CPF investments, and we can pull the money in as long as you have a sufficient balance. In the case of cash, when I create a cash investment, Sinting would actually get an email with the funding instructions for that cash investment. She will also get a notification telling her to fund the investment, which is now pending. If you want to see your fund transfer instructions, when I make a redemption from Sinting's account, with SRS, it will be executed on the same day. So if it's before 8 a.m., it will be executed on the same day, the end of day NAV price of the funds, and the money would then be on its way back to UOB Kay Hian. When it reaches UOB Kay Hian, it will then get sent on back to your agent bank directly. When that process ends, you can then make another investment with your SRS if you do not already have SRS money in your SRS account.
Okay.
Sorry, a couple more questions. We'll try to answer a couple.
I hope that answered your question, Jackie, and a few other people who asked those questions. I wanted to address two questions. One is from Shi Feng, and it's right at the top early on, and I took note of it, and I was waiting for the right time to answer it. But it's a question about historical performance charts for Cash Smart, and like the ones at General Wealth Accumulation. So obviously you're an existing client. Thank you very much for your trust. I'm curious about the fluctuation in performance. We showed you the performance numbers, and there's a reason why we chose not to show the historical performance numbers. And the reason was because, as we mentioned, the historical performance numbers actually look too good. So they look better than the reality of what you would be able to achieve right now. So we discussed it internally, and we decided that actually it's much more important for investors to know what is the likely yield that you will actually realize net of all the costs. So I think Jennifer Liu also asked us questions about how the fees are organized and how we take off the fees. All of the fees are annual fees that are taken out of your NAV of the fund. and it's already reflected on a daily basis. It's the fund level fees that the fund manager takes out. So it's nothing to do with Endowus, and it doesn't affect you as the investor. And it's something that is taken at source of the funds. So the number, the 23 basis points is already included. So you don't have to worry about that. The 5 basis points that Endowus access fee charges is calculated on a daily basis, and then we prorate it, and then we charge it only once a quarter because we want to make it as efficient as possible for you so that it has a compounding effect. And this is true for all of our fee charges. But basically, what we want to do is to give you the best estimate of what is the most likely realizable yield. And unlike investments where historical, long-term historical trends averages to a known kind of return number, and we can use that as a benchmark for future returns, we would not use that in this case, Shifan. So basically, we would just go with the projected yield, and we think that that is a much more accurate and probably a much more realistic assessment of what the returns will be. So I just wanted to answer that question before we move on. Any questions you see, Greg, that you wanted to?
Well, I think we're reaching our hour and a half, which we promised to not
again.
reach that. So I think we've tried to be very transparent, and we are releasing more resources around the Cash Smart portfolios online. We really encourage you to check out the Cash Smart landing page. Again, the link is below, endowus.com/cash-smart. And please check it out. If you have any questions, I think it's very important for people to realize that they can speak to someone on our team, and a link to schedule a call with one of our MAS licensed representatives is also below the video. So again, if you like the content, please subscribe. I hope I'm pointing in the right direction. Please subscribe, and thank you again for joining us tonight.
I think it's this way.
On this exciting launch of Endowus Cash Smart, and we hope to see you again soon.
Okay, thank you, everybody. Have a good evening.